Time for the disruptors. We're looking at Weibo today. WB is the ticker symbol. George Silas, senior markets correspondent, TD Ameritrade Network, taking a close look at this name. Tell us all about it.
Yeah, Nicole, Weibo, it's actually one of the largest and premier social media and communications platforms in China. We know that there's a lot of changes going on with China with the reopening of the economy, but this is a company that actually serves close to 600 million different users in China. And effectively, it's really a communications and social media platform, but also an advertising and marketing services behemoth, everything from social display ads to e-commerce affiliate marketing and product marketing. And overall, you got to expect, the catalyst in China right now with the reopening of the economy, that people are probably going to spend quite a bit more money. And I think this is one of the reasons why the stock itself has performed quite well since the October lows, but the other catalysts I think are a couple in nature. One, there's some regulatory ease on some of the Chinese stocks from a regulatory standpoint in China. The other thing is the U.S. dollar. The U.S. dollar actually peaked in October, Nicole, and since then, we've actually seen the emerging markets, and particularly Chinese stocks, move quite a bit to the upside. And this includes, in the last month or so, Weibo, which is up about 18%, but Alibaba, JD.com, Baidu, these are all communications or internet-based names in China, mega caps that have performed quite well. And I think there's a continuation potentially for these names. Now, when it comes to Weibo itself, you have to consider some of the risks in social media. We know through Meta or Facebook and Instagram, there have been challenges in advertising spend, as well as marketing revenue. If you look at Weibo itself, considering last quarter might have been the low point from the standpoint of sales and revenue. Last quarter, when they reported in November, the revenue on a year-over-year basis was down 25% compared to the same quarter last year. But on a forward basis, the analysts really only expect single-digit growth in sales and about single-digit growth in revenue. But if you consider Goldman Sachs' call today, they actually moved their price target at $25 from a neutral to buy rating. They actually see double-digit growth in sales and EBITDA going forward. And they also state, what I mentioned just a moment ago, reopening the economy is going to be a huge boom to marketing revenue, as well as e-commerce, and as well as retail spending altogether. And with the momentum right now in the market, we could probably see or possibly see a continuation in stocks like Weibo, as well as the rest of the Chinese stocks. So I guess what I'm trying to say here, Nicole, is that the estimates, which were already with the consensus analysts at the mid-single digits, might have been a low bar for the company, considering the company's expectations for earnings per share prior to the Goldman move in terms of target as well as rating was $2.09 a share, which really only put its forward multiple at 9 times earnings, with really the low point inflection quarter last quarter, which demonstrated a decline of 25% sales. So this might have a continuation going forward based upon the momentum, but also some of the regulatory risks which have abated.
Right, understood. So at this point now, with most of the outperforms that we're seeing, and as you mentioned, the momentum that we've been seeing in the market, how do you feel about a trade here for WB?
So in this case, Nicole, I think we're in a counter-trend rally with the overall broad market, with the S&P possibly getting in the 4,000 range. So I think that's good momentum for all stocks. I do think that the reopening of the Chinese economy is still a catalyst. So in this condition, we could actually structure a bullish trade. Now, looking at the stock price and then also looking at expirations, we'll go out to February, 39 days to expiry. You could actually put on what's called a bull call spread. It's a very simple trade. We're going to be buying basically a $20 call option for February and then selling the $22.50. Now, earlier today, you could have bought this for $1 per share or $100 $1 a share or $100 in cost. So the whole objective here is to have the momentum continue. Break even is $21 because you outlaid $1 in terms of debit. But if the stock hits $22.50 or higher, you're at $1.50. So you're risking $1 to make $1.50. And ideally speaking, the best outcome is the stock hitting $22.50 or higher by expiration of 39 days.
Yeah, understood. George Silas, thank you for that. The disruptors, Weibo.
Okay, Nicole.
Thank you, George Silas. Appreciate it.